Ryan Reynolds here from Mint Mobile with a message for everyone paying big wireless way too much. Please, for the love of everything good in this world, stop. With Mint, you can get premium wireless for just $15 a month. Of course, if you enjoy overpaying, no judgments, but that's weird. Okay, one judgment. Anyway, give it a try at mintmobile.com/switch.
Upfront payment of $45 for 3-month plan, equivalent to $15 per month required. Intro rate first 3 months only, then full price plan options available. Taxes and fees extra. See full terms at mintmobile.com.
Reality radio for a really great future. We're talking real money.
Hello, everyone. Welcome to another edition. Why am I looking at the camera? This is not a video podcast.
I think you're looking at me more than the camera, right?
I don't know what I'm looking at. You're there, and the camera's up there, but I don't need to look at the camera on this one. Yesterday was a video. Today is just a regular podcast.
Thank goodness.
Of just us talking.
There's only so much people should see of us.
Exactly. It's just too much. We get together on a very regular basis here and talk about money with you, and a lot of you listen.
Thank you for that.
Oh my gosh! On Monday, the
last
download,
day of January,
we had almost 9,000 downloads of various podcasts.
And you know it's not my mom because she's been dead for a decade, so it wasn't her sitting around.
I don't know what happened.
It's nice. Thank you.
It was nice. Thank you.
Appreciate it.
Thank you all. And we've gotten tons of really nice reviews.
Really? Nice reviews?
Yeah. We only got the last bad one we had was, let's just see, that was the 1-star one where they were mad at me, I'm pretty sure.
I'm trying to remember the last good review I got from my other job.
They were mad at me because I apparently made some political...
Somebody brought that up. Remember we already discussed this. We're like, you didn't say that.
Apparently they thought something I said. It was the one. It was from January 10th. The play stupid games, win stupid prizes. But then after that, we got one that says common sense advice, 5 stars. Straightforward investing podcast, 5 stars.
Wow.
It's the show I look for daily, 5 stars. Great investing information, to the point and a dose of fun, 5 stars. Great podcast, 5 stars. Excellent podcast, 5 stars. Wow. Listen how many we got. That's since January 10th. Very informative and entertaining, 5 stars. Entertaining way to learn about investing, 5 stars. Informative and interesting, 5 stars. Just since January 10th.
That's like 3 weeks ago. Well done.
I know. It's amazing. Thank you all very much. Now, today, we're going to try to make sense out of this industry. And it's not easy.
No, it's very easy. It's very selfish. It's self-centered. It's all about them, not you. It's pretty simple, actually.
Years ago, there was a new entry into the financial services business. Many new entries, companies that we call robo-advisors. And there were a couple of really big ones. Betterment and Wealthfront were some of the biggest. And these firms made a name for themselves by providing scientifically based, low-cost investing for the masses without all of the gimmickry, the lies, the obfuscation, the conflicts of interest, really, that the old big brokers have, right?
The aforementioned things I just said, yes.
They were the mavericks, the pioneers. They were moving into new places. They were going to do great things for their investors. They were going to leave the old ways behind.
Clean it up.
Clean up the industry. Yeah. Well, they'll do that right up until somebody offers them $1.4 billion. They're
going to be Wyatt Earp until the gold people come in and say, would you support us instead, Wyatt? Sure, of course.
Wealthfront, one of the biggest robos in the country, was just recently purchased by UBS, the giant banking conglomerate out of Switzerland. UBS is actually Union Bank of Switzerland, but UBS is what they call themselves. And we know UBS well because we've dealt with a lot of UBS. Yeah, I wish you were seeing the video because you could see my air quotes. Advisors.
They have a lot of them. 6 6,000 advisors. 6,000. That's a lot.
Yeah. Yeah. And now Wealthfront is not a commissioned product. It doesn't seem to fit with UBS's
Or UPS.
method of managing money.
But they
And
said
they-
when they did the deal, we're going to have the same values.
Yeah, that we have the same values.
right.
We're buying Wealthfront because we share similar values. That is
Huh?
just, guys at UPS, you're just fibbing. You know you don't share the same values. You wouldn't, then all of your people would not operate on commission, and they would be selling low-cost index funds at a tiny fee. You don't share the same values.
And culture.
Yeah, they also mentioned that in this article.
Come on.
And the people at Wealthfront, of course, going, let's see, 1, 2, 3, 4. You know how long it's going to take me to get to $1.4 billion counting mountain ones? They're just sitting there doing that, and of course they're saying while they're counting the money, they're going, oh yeah, we're good with this. We're totally good. Yeah, we think UBS is going to be good for us. They're going to have all kinds of great things to add. Like what?
Like the
What are they gonna
aforementioned
add?
obfuscation, big commissions, etc. All the stuff that they were going to clean up. But let's just talk about robos. I mean, that you're right. I'm trying to think of an analogy in another industry where somebody would buy
Analogy
somebody.
in
No, I mean,
another
where two
industry.
companies would come together and say, same culture, same values, and they'd be, no, you're not.
Oh, AT&T and Time Warner.
There you go. Yeah, like
They were
even
nowhere.
close. Yeah.
Oh, it's great synergy there. Oh, well, it was right up until there wasn't. This is why you don't see Apple going out and buying a bunch of big companies. They're going, it just tends
It's
to,
difficult.
when you have clashing cultures, it's hard to bring them together.
Okay, so, but let's-
And I've rarely seen a bigger clash of cultures.
No,
than
this
this
is truly opposites. But let's talk about robos in general. Now, you mentioned that robos were going to sort of change the industry, right? They were going to get rid of the conflicts. They were going to charge you far less. They were going to, in some ways, make all of this clearer so that you can understand it more, right? Have they done that?
No,
Really haven't.
no, they really haven't. They charged a bit less.
They charged less.
But
Yeah.
it's not dramatic, really. It's particularly when you get into the bigger numbers where many firms like ours have breakpoints on fees.
Yeah.
Our fee after $1 million is the same as Wealthfront.
I know. And we offer quite a bit more service and help
personalization.
than they do. So we have to kind of say that the business model of being a robo hasn't worked. And no offense to $1.4 billion, which sounds like a lot of money.
Well,
But in
and they do have they have
I forget.
$27 billion
Right.
under management.
Yeah, okay, which again sounds like a lot, but that's really in our business pretty small number. It's not. It's and $1.4 billion deal, pretty small number in corporate deals. So the robos, though, because remember when this all happened? What are we going to say? 10 years ago?
Yeah, it's about 10
Yeah,
years
10 years
ago.
ago. I mean, we were in the business, and we looked at each other and went, "Hey, this could be a real problem." Because
Yeah, do we need to do this?
Do we
need to do
right,
this?
because
and we looked into doing this.
we
We
did
even
look
played
into
with
this.
it for a while.
because they're charging what 30 basis points, and we were charging
Wealthfront's a little
more than maybe 40,
Wealthfront started
but-
at 50, but
you know,
maybe
okay,
not.
but half of what we were charging, right? Mm-hmm. And the whole idea here was, well, but we can do that, and we can give you service, and we build portfolios, and all of this stuff happens.
No. It's only okay. They're only 25 basis points.
Okay,
I thought.
and
I thought it
Vanguard
was
has a service
higher.
at 30 basis points,
30
right?
basis points, right?
You know, and so everyone in this industry that you and I are in was scared because they're like, well, wait, that's gonna wreck it because we can't charge half as much and still pay people and keep the lights on and have the fancy Honda Pilot I got out in the garage, right? Mm-hmm. So, but it didn't really happen, and it's been good for Vanguard because I think they have a couple $100 billion in their robo-advisory.
They're gigantic.
They're gigantic. So it has worked out. But here's the reason I will tell you that I don't think it has worked, nor do I think it will work. Number one, it's not planning centric. It's investment centric. It's for people that just want, it's like Acorns, which I love Acorns, but that's just putting money in. You're just saving money. That's not building a plan for all of the financial things that are going to come up in your life, right? Number two, sometimes it's conflicted. Well, you go to Vanguard and use their robo service. Guess what funds you're in?
You're going to use Vanguard.
Vanguard. It's not independent. And here's the third part. It's not personal enough. People want to know their advisor. This is a deep relationship if it's done right. And you don't get that from the robos. Now, they said people wouldn't care, but I think, honestly, Don, at the end of the day, having done this for a long time now, they really do care. They really want that relationship. And the robos cannot offer it and can't do it at 25 basis points.
And what cracks me up in this article from Wealth Management is the CEO of Wealthfront, David Fortunato, actually said that that Wealthfront's capabilities are going to be part of UBS's new digital offering. That part makes sense. But he said that they would benefit at Wealthfront from UBS's thought leadership, whatever the heck that means, and deep products and services shelf. No, they only have expensive products.
Wow.
Actively manage mutual funds. And he went on to say that it would give Wealthfront clients more compelling products and services.
I do think, having heard that now, he'll fit in the culture very well because he's moving into a culture that's titled UBS. I think he's right there. Sorry, that was a little too easy.
Yeah, little UBS coming out of that place.
Getting the hate mail now for that one.
I got to tell you, this is the way, and they're talking about Betterment being acquired by a big bank soon too. And that really, it's so funny. I mean, okay, maybe we shouldn't talk. We were acquired by another firm.
Yes, we were.
But I got to tell you, we turned down offers from firms that we knew didn't fit what we do.
And let me ask another question. In 5 years, will Wealthfront still charge 25 basis points for that kind of work?
I bet not.
I bet not, too. I'm going to circle the calendar. Check it out.
So anyway, just be careful out there.
Yeah.
There's a lot of people who don't want to take care of you the way you deserve to be taken care of. And it's hard to find somebody who's going to do that. It really is. It's so frustrating. If you like to get your questions answered honestly, you should call us at 855-935-TALK, 24 hours a day, 7 days a week. Or do like so many, way too many, send them in to talkingrealmoney.com and we'll answer them.
We got a big stack of them again?
We do. We got questions going back to 122 now.
Okay. That's like 10 days ago. So go ahead. What do we got?
Which is fine. All right. Here we go. Hold on. This is a short one. You'll like this. I recently heard your podcast that REITs should not be owned in a Roth account. Can you explain a bit more why this shouldn't be done and the impact this may have on your investment? Thanks again. Love your show.
Not what we said.
Yeah. We said they should be owned.
Yes.
In a Roth account.
In any qualified account, IRA, Roth, 401k. Because a REIT, a real estate investment trust, has to pay out 90% of its earnings every year, it's tax inefficient. It should not be in an after-tax, maybe they heard me say after-tax account. I'm speaking there of a brokerage account, not a Roth. Nothing that happens inside the Roth is taxable. Well, actually, nothing that happens outside of it either. But in a brokerage type of account, all of that money that they're paying out, you're going to pay tax on it. If you keep it in your Roth or your IRA or your 401k, you will not pay tax on it. So sorry for any misunderstanding there.
Yeah, we have never said that. We think you should own real estate in your tax advantaged accounts like Roths because that's a better place to have it. Do you have to go? Or do you want to know?
No, we got one more. Yep. I
All
have
right,
no pending appointments. Got other things to do,
so
but I can.
busy.
Yeah, I know. It's been kind of busy.
It's another one applying for humor writer on Talking Real Money.
Good. Well, we need somebody badly.
And
The
of course,
4 jokes are up. Yes. Go.
apparently they think pandering to you is the
That's probably pretty
is
smart.
the way to get the gig. So,
Pretty good.
Tom and Don.
Yeah.
Not again. I'm relatively new to investing, about 2 years, but currently living overseas and working for the U.S. government, which has allowed me to start saving a decent amount. I am 35 years old and have more time to continue investing. I put my entire life savings in crypto.
No,
Just
you're making
kidding.
this. Oh, you had me there. Okay, you got me. I was like, whoa, wait a minute.
And
That's
that was
good.
him.
Okay,
That was
that's
him.
good.
See,
I like
he's
that
the
little
co-
bit
he's-
of. Yeah, okay.
A little
Yeah.
comedy writer.
Uh-huh.
I am debt free except some student loans. That's not really debt free, but okay. Who knows? You may get those forgiven. My daughter hopes that every day. She's like,
by the
do
way,
you think Biden's going to forgive my student loans?
I
That's
eat
why she
health-
voted for Bernie. She was like, I'm going to get my student loans forgiven.
I eat
No selfishness
healthy
there.
every day except for the cookies and cake. So it's good. I get it. Yeah. Okay.
I'm maxing out my Roth at
No.
$6,000 a year. Have 12% with a 3% match going into my 401k. I'm putting $500 every 2 weeks into a core portfolio at E-Trade, not E-T.
Okay.
E-Trade.
Yeah. 500.
Non-tax advantaged.
Yeah.
My Roth is in a core portfolio at E-Trade. All investments in these portfolios are either iShares or Vanguard with a mix of large, small, international, and emerging.
Good.
I have both set up as 99% stocks, 1% bonds, cash money market, and have a 0.3% cost.
Okay, wait a minute. Just to stop right there. There is absolutely no reason to have 1% in bonds.
Maybe that's his emergency money.
Okay.
He doesn't have that much.
But the thing is, it doesn't change portfolio performance unless you have at least 10%. In other words, when the market goes down 50, you're going to lose 49.5. I guess if
Or maybe he's keeping 1% of his powder dry for when the market corrects.
Oh, we're doing that again. Okay,
don't know.
we're
I'm
waiting
just
for the
guessing.
market to go down, Tom.
So
Yeah,
he's got a 30 basis point cost.
Good.
He says, I listen to you guys a lot and would like to know your thoughts on transferring these to Vanguard instead of E-Trade, or is that not worth the trouble? P.S. I also need to give a shout out to Stacking Benjamins, Joe Saul's High, as they are the ones that turned me on to you guys in 2020. Thanks, Matt.
And we're going to have Joe on the show at some point, right?
We are.
Okay. Because he wrote a book.
And I'm going to be on Stacking again sometime next week, I think.
So like February 7, 8, somewhere in there?
That week, somewhere in there. I don't know what day.
Congratulations. Okay, so moving the money from E-Trade to Vanguard. Mm-hmm. I do not see the reason.
I don't either.
Why would you do? I mean, in other words, I think you can get pretty good low-cost exchange-traded funds with no transaction fees at E-Trade, right?
Including Vanguard.
I think you can.
Yeah. No, you can.
And you could buy Avantis there probably, and you could buy Dimensional probably for no transaction fees as well.
Yeah.
So I wouldn't do that.
No. But Matt, nice note.
I was a little okay, but there was a question I had.
No, there was
there was a question I had. I don't understand why he's not maxing out the retirement plan and instead moving money into an after-tax sort of environment. That part I didn't understand. In other words,
well, he didn't really explain it. He says he has 12%.
Why not make it 15 if you have more money? That was the part I didn't understand.
Maybe 12% maxes him out at the 19.5.
Could. Okay, fair enough.
Okay.
That's true. Which is the
Although
most.
that would mean he makes really good money with the federal government. Wow.
Okay. Federal government doesn't have a 401k either, because I think he said 401k.
Well, he says he works for the U.S. government. Maybe he's a contractor.
Oh, okay. All right. Anyway,
So
point
he could be
still,
making that kind of money if he's, like Northrop Grumman or something.
Sure. Yeah. Which is popular in my room here. No, I mean, Halliburton. Oh, God, you got to go there, don't you? That's my only question is saving it in their qualified retirement plan or saving it post-tax in a brokerage. That might be worth examining. But I can see absolutely no reason to move from E-Trade to anywhere for that matter.
So before we call it a podcast, do you have any additional messages that you'd like to share with our podcast listeners?
Am I supposed to
around
come
the
up with
world?
something here? He gave me no warning about this. I have no idea.
I don't give you warning of anything.
I know. Well, it would have been nice if you wanted something profound and I'm supposed to all of a sudden just come up with.
I just thought maybe you might want to tell people
I know
where
what.
they can go to get help.
Oh, I'm going to say thank you to all the people that remembered my birthday. Many people text me and bless you, because a lot of them, I don't even know the numbers. I'm like, thank you. I hope this is somebody that I cared about at one
I've
point.
stopped counting. I don't care anymore.
About the number of birthdays?
Yeah,
Or just birthdays
I don't
in general?
care. I don't even want them in general.
I
Just
was
tell me.
spoiled to death, so I feel very guilty about the whole thing. Is there anything I want to add? Yeah, there's something I want to add.
I knew there was.
Most of you need help. We answer
Yeah,
these questions and bless
and
you.
I keep telling Tom that, but he won't get the kind of help he needs.
Well, there's only a certain number of pills of that remaining. Here's the thing. And then I sleep all afternoon. Yeah. Ask for the hour. I know people think it's going to be a pitch. You're going to sell me.
it's
I
not.
get it, because this industry's been doing that for 90 years or 100 years, whatever it is.
That's why
I
we will not
understand.
call them free consultations.
Yeah, no, because
that means
sure.
you're
Come
going to get
on
a
in.
sales pitch.
Yeah, you will get a pitch. But
It's
here's
just
the
a
thing.
meeting. It's a chance to, and you can do
And
it on the phone. You can do it over.
It's more than
Zoom.
a meeting. It's more than a meeting, because we will actually take your portfolio, we will analyze it, and we will tell you if you're properly diversified or not, which I don't want to pick on you, but many of you are not. How much you're paying others.
Oh, no. We don't need to. You are, most of the time, you guys think you got it right.
Two portfolios I've ever seen that were actually like, I wouldn't change a thing with that. It's only happened twice. There's all kinds of reasons why. Anyway, so yeah, take advantage of it. I think it's a great offer. You're at home thinking this guy's selling me something. I understand that. Totally get it. But anyway, you can set up the time you want to. You can do the whole
And there
thing.
have been a couple of times when our new partners went, really?
That
Should we
won't
give
work.
this away?
Yeah, that won't
Yeah.
work.
Yes, we should give it away, because that's what we
started the
really,
firm
our
sending.
goal
Yeah.
is to help first,
Yep.
make money second.
True.
It's a better way to do business.
Probably
It's
the reason
way,
I still got the pilot out there, right?
It's the way so many great businesses in history did what they did as well as they did. When people lose that mantra, where it's profits first, taking care of people second, that businesses start to become either awful or, like Sears, fall apart. When Sears got rid of the satisfaction guarantee to your money back, we make great. We source great products. We're only going to bring you the best stuff. The Die Hard line, the Craftsman line.
right.
We're only going to bring the Kenmore line. We're only going to bring you the best stuff. When they stopped doing that, that's when the company fell apart. In my opinion.
I think that's fair. So you go to vestory.com. You can set up an appointment for the time and day it works for you. Just talked to somebody last week that signed up for me. Did I tell you this? That signed up for a Saturday meeting, and I sent them the Zoom invite, and they never logged in. So I called them. I'm like, hey, we're supposed to have our meeting now. They're like, no, that's 2 weeks from today.
See, Tom's a little over anxious.
I know. So anyway, I am
Well,
doing on
okay, wait,
Saturdays
I
because
don't-
I'm working Saturday anyway. So what do I care?
Since you don't have anywhere else to go, I was just going through the questions because there's so many of them. We have got to do this one. It's not really a question. It's sort of a rhetorical question.
All right,
and
go
you
ahead.
are going to love this
Oh,
one.
good.
No,
Well, I like the humor one so far.
This one is like, wow, this
All right.
is such a great
Okay,
opportunity.
This better be good after that buildup is all I can say.
No, it's good. It's good.
All
I
right.
started reading it and I went, oh my God.
Go ahead.
Hi, Tom and Don. Again with the Tom and Don.
That's random. Come on.
It's not random. People keep like it's a trend. Thank you for your wonderful radio show / podcast. You guys make personal finance fun and interesting.
Oh, by the way, we need to mention our radio show is now on AM 1000 Northwest News.
Same station,
Oh,
just
okay.
different
Just
call
wanted to
letters.
Put that on there.
All right. You're going to
Yes.
love this part.
Okay.
You both provide a great service. And by the way, I did like you on Apple Podcasts. Thank you.
That was kind.
Before I found your podcast, I listened to Rick Edelman for 2 to 3 years. As you know, he left Edelman Financial Engines and his radio podcast of nearly 30 years. So, you may have heard he has a new podcast. Have you listened to this? What
I haven't
the
listened,
heck
but
is
I know
going on?
I know what he's talking about, but I haven't listened to it. No.
I'd say about 1/3 of it is an advertisement for high-risk investments such as QQQ ETF and Bitwise Crypto ETF. This fund charges 2.5%.
Wait.
And 80% of the fund is in Bitcoin and Ethereum. What is he doing? How much are these places paying him to sell his RIA fiduciary soul? Oh, I love this. He would never have been okay with this kind of investment advice when he was an RIA. Please help me understand how a well-respected RIA CFP could do a 180-degree turn. What is happening with crypto? This appears to be the largest scheme bubble of a generation. I agree with you guys. I won't put a penny into this crap because it's worth zero. I subscribe to your investment advice of low-cost funds and ETFs and well-diversified across many asset classes. Thank you for your time, and please tell it like it is with Rick.
Okay, so going back to Rick. Rick, you know, there's other people in the industry that don't like Rick either. So,
Tom, there's one word when she says, "What was he doing? Why would he change from a respected RIA CFP into this?" There's one word that answers that question. What's the word?
Cash money.
Money.
Yeah. So, but Rick has been a proponent of crypto for several years now. This is nothing new.
Not to this extent.
I didn't know he was recommending a fund that charged 2.5%. And I'm not, you already know we're not fans of crypto, nor do we think you should run off and buy it anyway. And I don't really even understand why he's doing this new show. He's on like 20 markets again. He's got the podcast rolling, et cetera, et cetera.
Oh, okay. Wait, I got another word for that one. Ego.
Yeah, I guess that must
Ego.
be. Because his other shows very capably being handled by, and I'm forgetting her name now, but
Schlesinger?
No, not Jill Schlesinger.
Oh, no,
Anyway,
it's the other one. It's, what's her name? Jean Chatzky.
Jean Chatzky, who I've interviewed before.
And the woman
on
from
TV.
the Today Show or something. I can't remember her
Solil.
name.
Yeah. So
Solil.
anyway, why is Rick doing this? You know, the only motivation I can think of is the aforementioned money. I don't know and he truly believes in crypto. He truly believes in this longevity thing that he's running around pitching to, that we're all going to live to like 130. So you need to be putting your money into riskier things to make more money, I guess.
And wait, I got an answer
like
for why he believes that too.
Yeah.
Wishful thinking.
We're all optimistic, right?
Rick's going, oh God, I'm old. I'm not ready to die. Of course. No, I'm going to live a long time. Yeah.
I don't know what to tell you other than that. There's people in our industry that think he finally, I guess the expression used to be flipped his wig or, whatever it was. But
Jumped the shark.
Yeah, it's crazy. So, I don't even know what his relationship is with Edelman Financial Engines anymore. If he's completely out the door.
I don't think he has any. I think he's completely out.
So
I think
anyway,
he sold it out.
I truly do not respect advice that wants to put you in any fund that pays that much, nor do I respect advice that wants to put you in crypto. I think it's poor advice.
And QQQ ETFs.
What? Huh? Really? That's just weird.
I know.
There's people, by the way, I did talk to someone else in the industry who's been around for a long time, and their take on Rick was, Rick likes things that are new, that are exciting. Remember, there was a time when he liked dimensional funds when it was kind of the new kid on the block. He gets bored with it. He moves on to something else. There's a little bit of that in him, so that's why he's here. And maybe next year he'll be buying whatever Nifties or whatever new thing. I guess that's not new enough anymore, but something like that. That's not an excuse. That's simply an explanation.
I think, you'd think at first glance he lost his marbles, but I honestly believe that his ego is so big he cannot possibly be without a radio show and a podcast, and that when you get to that level of money making, that it becomes an addiction. It's just the accumulation of more money. I just want more money. I love making money. I just want to make more.
Doesn't need it.
Because he can't possibly spend everything he has.
That's a good point. So why is he doing this? I don't know. But the fact is he is, and I don't think you should listen to his advice any longer. I'd put it that way.
Maybe somebody should call his show
and ask him, what the heck? Hey,
Yeah,
dude,
what
remember when you
happened to
used to
you,
recommend
Rice?
like index funds and that kind of stuff? Wow. So anyway.
So thank you all for being a part of our gathering here that, again, ran a little long, but we were
Indeed.
having such a good time. We just wanted to keep sharing it with you.
Yeah.
And we will do it again soon. Friday is the Q&A podcast. Always a great show. Saturday, we do the live show on KNWN
Okay,
Radio,
look at
which
that.
is
Got it right.
Northwest News Radio in Seattle. It used to be Como Radio, but they sold it. And
Formerly
Como's still a
known
TV
as Como.
station.
Yes, got it. Mhm.
Yeah, but same station. And we take your calls at 855-935-TALK live on Saturdays from noon to 2 Pacific, 3 to 5 Eastern. There you have it. Okay, we're done. We're gone. Thanks, Tom.
Thanks,
Go
Don.
do whatever it is you do the rest of the
knows?
day.
Yeah.
I have no clue.
Neither does anybody else, and they don't need to know.
Just going to go take a nap and watch a soccer game.
Probably right.
See you guys. Hey, take care. I'm Don. That's Tom. I put myself first that time because we just hang out talking real money.
We hope you realize that the information provided on Talking Real Money is for informational, educational, and hopefully enjoyable purposes only. Providing personalized financial planning or investing advice takes time, so please consult with a really good fee-only fiduciary investment, tax, or legal advisor. We know a good one. Investing must always involve risk. In other words, you can and probably will lose money at times. Also, as much as you want it, no one can accurately and consistently predict the future, so past performance doesn't tell you a darn thing about what the future will bring. Unlike many other programs that say something similar, Talking Real Money is not trying to get you to buy or sell any financial products or securities. Instead, the program is provided as a public service by Appella Capital, a fee-only registered investment advisor. Thanks for listening, and please visit TalkingRealMoney.com for more information and disclosures. And to keep the lawyers happy.